Teen Fashion Tips here, back with another video. As always, thank you so much for the support. I truly appreciate everything you guys do, all the comments on that. I see all of you, and I truly appreciate it, helping this channel grow and just spreading positivity. I appreciate it more than words can say. Anyway, so today I just want to talk a few, I guess you could say, financial investing tips for teens or whatever, because I've gotten a few private messages actually asking of a few 18-year-olds and 19-year-olds like, great, I'm 18, what do I do now? Now, if this video doesn't apply to you or you're too young, it's still great information to have for when you turn that age. So say that all of a sudden now you're 18 and you're ready to start investing. Now, first thing I would suggest you do is find a local branch or app that allows you to invest in a tax-free savings account. If you're in America, this may be called a Roth IRA. In Canada, it's a TFSA, and I'm not sure about other countries of what they're called. Basically, these accounts is any money that you make, the government will not take away. So, for example, if you don't use this account and you make $100 and it's outside of a TFSA, the government will take $30 of that 100 for their tax purposes. So you might have made $100, but now you only made 70 just because you didn't open an account. So first things first is finding a firm that allows you to have that account. So in Canada, there's examples like Wealthsimple. There could be banks like TD. You have to read and research what the trade fees are. And this is where a lot of the personal research I ask on you guys of actually getting better and moving forward on yourself, not just selling you a free app, is on you guys to go out and research and find what works best for you. Now, second is now that you've got the money in your account, it's all figured out, you can't just let it sit. It's not going to grow itself just sitting in a TFSA. And it's a common misconception many people have is you'll hear people say, open a TFSA and put money in it. That's great, but the money's not growing. You're not investing in it. It's just sitting there. So what you can buy is there's stocks called VOO, VTI. These are the ticker symbols, 3-letter symbols that identify a stock. And what these stocks are is they basically track the share price of the top 500 companies or of the entire stock market. So it kind of spreads out that risk a little bit less. So say if you invested in one company and they went under, you're at fault for that company and your money's going down. You won't lose more than you invested, but you can lose your entire investment if that company goes bankrupt. What happens with these mixed funds is there's a bunch of companies in them. So say one company does really good, you might get a little more money. But if one does really bad, it won't really hurt it that bad because it's all staying in this main area because there's so many companies spread out. So that's the second thing you have to do. Now, the third thing is how much to invest. Now, I suggest first off, if you have any credit card debt, student loans, you pay that off first. You are not going to be out trading or out earning these kind of student loan debts or these kind of issues. If you have those, pay those off first or you won't find any success and you'll actually make yourself worse by investing. But let's say you have enough now. So depending where you live, you can contribute a certain amount of money into these accounts every year. In Canada, it's $6,000. So at the end of the year, my end goal is to have $6,000 invested. It doesn't mean I made $6,000. It means that I can invest $6,000 into that account and it can grow more than $6,000. So if I double my money and have $12,000, it's still not taxable. But next year, again, I can add another $6,000 if that's the limit the government decides. So I can continually add each year and watch it grow and grow and grow. So if you think to yourself, $6,000 a year times 10% usually is a good rate that you can earn back. So $600 a year in profit times 40 years, but then each year you add another 6,000, so it goes from $600 profit, $1,200 profit, you start getting $2,400 profit, and you see every year it starts growing fast. It's a really simplified explanation, but I can go more in depth if requested. I just want to thank you guys always. I like to make these stuff for a couple older teens because when you're still a kid, when you're 18 and 19, I'm 19, I still don't know what I'm doing, but it gave me a good start that allows me to sit here and make YouTube videos for you guys. So I want to say thank you so much. And again, I'll be working on getting a tripod and a camera so I can actually set up proper stuff. I can show outfits, I can do stuff so I'm not just wearing a white shirt or whatever, and you can see proper outfits, chains, jewelry, and I can talk to you more on one-on-one with higher quality. Anyways, thank you guys so much for watching. Teen Fashion Tips out.